Man, oh man, another great day comes to an end. Hope you guys had a fantastic Wednesday out there. Boy, one of those days that reminds us why we love being traders, right? But we're back to work tonight, though. We're only as good as our next trading day. It's Wednesday evening. We're getting ready for Thursday's trading session. I have a ton of great trades on my radar for you guys for tomorrow. As always, I'm going to cover all my favorite trades in tonight's video. That way you get a game plan to make some money on Thursday. Before we jump in and get this party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoy this video, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel and watching here tonight. But enough of the intro. Let's get ready for Thursday, or as we often call it, Reaction Thursday, the Thursday coming after a major news report. So where's the money tomorrow, right? Where's the big paychecks tomorrow? Where's those low risk, high reward, easy, low hanging fruit trades? Well, everything's bullish right now. You can see, right? Nasdaq is bullish, S&P is bullish, and of course, crude oil is bullish. Boy, Nasdaq and the S&P, they are looking for some breakouts right now. You can definitely feel the S&P trying to push higher here out of those trading ranges here that we saw for most of the day here today, though. So buyers are definitely controlled, looking for breakouts here, going higher. We also would love to get some nice deep pullbacks. We never saw that deep pullback we're hoping for today. We got some nice shallow pullbacks and found some great trades today in the morning trade with the members, but we still haven't seen that deep pullback yet. So I'd love to get some deep pullbacks. I've definitely got some breakouts on my radar. And also, too, on the NASDAQ and the S&P, anytime we see a market go this far, this fast, we know there could be a reversal waiting out there somewhere. So I got a couple ideas for some reversals because that might be some of the best money to make on Thursday's trading sessions. We'll cover the buy side. We'll cover the short side here on the NASDAQ and the S&P. Over on the oil is definitely bullish right now, but I've got 3 reasons why these buyers have to show us a little bit more here. There's a lot of reasons to like some short side trades here on the crude oil. Yeah, we're bullish, and we definitely are looking for breakouts going up to that 95 big round number, but I'm not going to lie. I got a bunch of great ideas for some shorts going back down to that 90, that juicy range back there at 90. So make sure you stick around tonight, and we'll talk about the crude oil here. Get some great trades setting up on the oil futures for tomorrow. Now, speaking of tomorrow, before we jump into each one of these charts here tonight, don't forget the game plan for tomorrow. Tomorrow we have the PPI report. This will definitely not be as dramatic as the CPI report that we saw today. The CPI report, of course, is the consumer prices. We do live in a consumer-driven economy, which is why the CPI report is a lot more potent of a news report. Tomorrow, the PPI report, though, kind of the little brother, the cousin, right, of the CPI report. We're not going to see as big of a reaction tomorrow. I can almost guarantee you that. But it is something that will likely move these markets for tomorrow. Nobody cares about jobless claims right now. Jobless claims, don't let distract you. The PPI number is the big potential market catalyst for tomorrow. We're going to continue to listen in for Fed speakers. The Fed speakers are something we are watching closely right now. We're also watching the situation in Russia and the energy situation for Europe. And of course, we're continuing to watch the situation with China and Taiwan, as we creatively called it, right? The Taiwan situation last night on the video. So those are kind of the 3 things for tomorrow. The PPI report, of course, is the one that we're all watching. Will we see any more developments, though, out of the energy situation out of Russia, out of the Taiwan situation, right, happening in China? Those are some known unknowns for tomorrow. Also, be aware there'll be no newsletters next week. We took off the 3rd week of July. I'll be taking off the 3rd week of August. So no newsletters next week. There'll be no video uploads next week. So soak it all in tonight and tomorrow. As I mentioned, in the month of July, I am working on some very big video updates, video course updates for all of our students. I'll be back to work on those next week in the afternoon. So no video uploads next week. As always, if you're a student of mine, I got you covered. But if you're not, there'll be no videos going out next week. We'll come back that final week of the month of August. We'll talk about that tomorrow night. Back to our charts, though. This is where the money is, right? The money is on the charts. Now, whether you trade one of these markets or you trade all of these markets, make sure you watch all the way to the end of this video, because you'll learn something new throughout the entire video here tonight. I'll provide different trade ideas, different trade variations, different advanced trade setups as we go deeper. And I always try to kind of bring it all together with the good stuff towards the end. So make sure you grab a notebook, take some notes, take some screenshots. And if you got any questions, don't be afraid to drop those questions in the comment section below this video. Why don't we go to the NASDAQ first? Let's get this party going tonight on the NQ or the micro NQ or the QQQs, whichever your fancy is on this. This is a 4,000 tick chart here on the NASDAQ. You can see all the time frames in the upper left-hand corner. Now be aware of this. Pretty much everything I talk about on the NASDAQ can be applied to the S&P or the SPY, okay? Everything we talk about the SPY or the S&P can be applied to the NASDAQ. So they're very, very interchangeable, so I'll do my best not to repeat myself too badly here tonight because, again, the S&P and NASDAQ are very, very similar. There are three key insights right now on the NASDAQ and the S&P that are telling us where the best money-making trades are likely going to be tomorrow. First things first is we do have a bullish bias on the 4-hour. I call this the medium-term bias. Long-term, we are still bearish right now, but I'm not a long-term trader. And so if you're a short-term trader, you really don't want to care about the long-term trend. Right now, our 4-hour bias, our kind of medium-term bias is bullish. And you can see, obviously, too, our short-term bias is bullish right now. So those are definitely agreeing with us. That tells us that the long side is probably going to be the easier side and the most reliable side until something changes here tomorrow. And I'll talk about how that something might happen tomorrow as well. The second component on this is that trading range. You'll notice the market made that strong spike up, starts trading sideways, runs lower, and now we are, as I always call it, rotation off the low. We're rotating now off the low of that channel. Now, why is that, the low of that range? Why is it important? Well, first of all of that momentum now, right? That's really strong. That momentum is very bullish. It's very strong. We should focus on the buy side, at least for right now. I do have some reversals up my sleeve for tomorrow, so we'll cover those in a moment. You can also see, too, the amount we go below the range I have marked up above the range, and this creates a very, very important area of resistance. We call this the pendulum swing. So we're bullish, but we're not quite out of the woods yet. We've got some resistance up overhead around that 419. You'll see something similar there on the S&P as well. The third key component, the third key piece of information is a spike in channel. The spike in channel is a little bit difficult to see. But you can see it in the chart here, right? We draw a trend line off that high. We draw it down off that low. And you can kind of see, right, how it kind of goes up, pulls back, goes up. Now, you could definitely argue that there could be a spike in channel right there as well. But think about this as a bigger spike in channel. Now, why do I care about that? Why is that important? Well, we talked about this earlier this week. Anytime we have a strong spike up into a bull channel like that, the base of that channel, right? In this case, it's 216.5. That is where we know a lot of buyers are waiting. I mentioned this before. We did get a pullback today, and we found some great shallow pullback opportunities this morning in our trade room, but we never really got that really deep pullback that I think a lot of buyers were probably waiting for here today. So that area down here, you have to think is a really, really attractive area if we can get it. So putting all this information right together right now, we're bullish. We'd like to be a buyer on this. I'm open to being a seller in the right situation. And really what it all comes down to right now is do we break out through that high, right? Do we break out or do we pull back? You know, that's kind of the simplest way to think about it right now. If we break out going higher, I can think of a bunch of different ways we can make money on that tomorrow. If we run lower, definitely thinking about some longs off that low or possibly a reversal all the way back down. We're bullish right now, though, and we're kind of knocking on that door here of that pendulum. How would I trade a breakout? I'm going to get rid of this channel here just for a couple minutes here while I go over this with you guys. There are really a ton of ways we can trade a breakout going higher. You know, for example, if we hold this pullback off the moving average and we jump higher up through that pendulum, and we really can jump, right? Really jump off that moving average. We know where the market wants to go. It wants to run up to that measured move area at 13,524. From there, we have more levels at 76, 33 as we go higher. So plenty of levels waiting overhead here. Look for a 1, 2, 3 breakout pattern, a strong pop here up through those highs here. Then we can draw a trend line off that high, mark a channel off of that low. And one of my favorite entries is to look left, find a prior swing, and then go in for either a trap off of that low or what I call a failure pattern off of that low. Think about that measured move as a target. Think about that 76 3/4 as a target. That is an easy one to think about. I would also watch for what's called a pop and grind breakout. So it pops up and it begins to grind as it goes higher. These are some of the easiest types of breakouts you can make money with because you simply draw a trend line off those highs, you bring it down to that major low, you look left, and you find some prior swings. That's the key. You want to get underneath a prior swing. Most importantly, you want to get underneath the moving average, right? So below a prior swing, I can grab a trap setup. Below the moving average, I can wait for sellers to come in and try to get short. Once they get short off the moving average, I know where their stops are, and I can use their stops for gasoline or fuel going higher. And then, of course, I can find that first pullback right off the moving average. Again, it's a pop and a grind as it goes higher here. Draw that trend line nice and tight off those highs. Anchor it down around some of these prior swings. Grab that trap, that failure, that pullback combination. And an easy way to think about a target on this is the size of that pop leg, right? The size of that breakout leg is oftentimes the size of that third leg. Right? We talk about how first leg, second leg, third leg in trends, the first leg and the third leg are almost always identical. So use that as a target, right? So that pop and grind, love that pop and grind as it pops up and grinds higher. Another one of these, easy one would be a strong run up, right? Real strong run up, a shallow pullback, strong run up, shallow pullback, higher high in price, and of course a trap below that low. So if it really rips, right? If it really jumps higher overnight, strong move higher, shallow pullback, higher high, these are one of my favorite trades, right? These traps below prior swings. We do a lot of trading with traps in our trade room. We cover these traps in pretty good detail in our free trading course. So if you're one of the few folks, I know a lot of you guys have taken the free classes, you've learned all about the traps, the failures, the pullback combos. But real quickly though, if you haven't taken that free class yet to learn all the entry tactics that I'm talking about in this video right now, what I'll do is I'll put a little link up here for you in the upper right hand corner. Grab that link, register for our free trading course on the website. The strategy that I teach in that free class will get you into more winners, help you avoid costly losses, and give you a ton of confidence every day when you get to your desk. If you're like me and you hate missing the best trades or you're taking too many losses, that free class link I just popped up will get you right on the right track and give you a lot more confidence every day that you trade. So definitely grab that link that popped up there. It's perfect for somebody who's trying to make the jump into full-time trading from part-time trading, right? A lot of my folks have taken that and made that jump pretty easily. So watch out for that breakout going higher here. Now, how can we short this thing? Okay, how could I short it? Here's something to think about. Now, let's say we go up. We get that 1, 2, 3, right? That nice big jump. We find that channel. We buy that pullback, and we go back up and retest the high, right? We run into a measured move up here. Again, we're going to buy that pullback. We'll grab our traps, our failures, our pullback combos, the same stuff you guys learn in that free trading course. Once we retest that high, now mission accomplished. Okay, this measured move, and really it could be anywhere, really. It doesn't need to be that measured move. That measured move is basically a double up of that big news spike. Take the big news spike and pin it right there, and that's a measured move. Okay, these are very, very common after a big news day. Okay, so now we get that breakout going higher. The buyers come in, they buy that dip. We retest the high, mission accomplished. Now, As the rookies come to the market and they start chasing this now we look for the reversal. To do this though, what are the three things we need for a reversal? One is a major turning point, like a measured move, like a retest of a high. Two is we need signs of exhaustion. Now, the way that I look at signs of exhaustion is a two-try rule. I want to see buyers trying once, and I want to see buyers trying twice. That's my definition of exhaustion, okay? The third thing you need for a reversal is some sort of catalyst. And to get the catalyst, what do we use? We use a stop run. The easiest money you're ever going to make in trading is when you are, for example, selling short off a major level of resistance, right, with signs of exhaustion, and you're selling right into the buyer's stops who are stuck in this thing long. Buyers should not be buying right there, right? They're buying here, they're buying here, right? If they're buying late like that, they need to learn this lesson, right? We all got to pay that bill. We all got to pay the tuition bill to the market in some way, either through a mentor like me, right, or through losses, because this will cost you money. So once those buyers now try a couple times, right, now we know where their stops are. And this is where the fun starts to begin. Look for those proper signals. You'll learn about signals in that free video class that I mentioned earlier. That's our short off the high. Right? It's a strong pop up. It's a retest of that high. It's buyers trying twice, and we're selling it right into those stop losses. Now, as the market now rolls over and goes lower, this is where the fun begins. Mark off a new low off a new trend line. Find a channel off of that high and start looking for, repeat after me, the first test. The first test is the best test off that channel. Okay? It's a very, very simple idea. We run up, the buyers buy the pullback, they retest that high. The rookies, the inexperienced traders come in, they're chasing after it. They should have been earlier. At this point now, the buyers take their profit. We run those stops. We anticipate where stops are. We sell right into those stop losses, right, for that reversal, that double top reversal, that two-try failure reversal, and then we find that new channel off the low, mark up off the high, and we grab whichever entry setup we can find off the high of that channel, right? Two-try failure gets the party going. And then this could be a trap setup. This could be a pullback setup. It could be a failure setup off of that high. Where do we think the market wants to go? You know where it wants to go. It wants to go back down into that trading range. Does that make sense? That's pretty simple, right? So again, there's about three different ways, right? The 1, 2, 3 breakout, the pop and grind breakout, the two-try breakout going higher, and then watch that reversal once they retest it. Okay? Be aware too. This could easily go bam and be really big, right? So this could be a lot bigger, deeper pullback. So don't, again, be patient for it, right? But once we double top that high now, then that 1, 2, and back down, that's an easy way to make money on both sides of this market here tomorrow. And I'm very, very excited about that potential for a breakout going higher here. Could I sell it right now? Would I sell this thing right now? It's really not a very easy market to sell right here, right now, because again, we're bullish overall. We got a breakout on our hands. I've learned over the years not to try to pick tops in a bull range like this. It's just not as easy as I wish it would be. The next question is that how do I buy it as it pulls back? Because then after all, that would be the one we really hope for. Okay, this is where the big money is, that deep pullback. And then also too, how do we know at some point when it reverses? Okay, let's talk about that, because that is definitely a very, very viable plan of attack for tomorrow as well. Let's go to the S&P. Right. Again, keep in mind, pretty much everything we talk about here right now can be interchangeable between the S&P and the Nasdaq. So over my S&P right now, or the SPY, or the micro S&P, I have a lot of students right now trading the micros. I love the micro contracts, and you should too. This is an 8,000 tick chart here of the Emini S&P, or the SPY, or the micro S&P. Now, we talked about the breakout, right? We talked about that 1, 2, 3 breakout on the S&P. We talked about on the Nasdaq. We talked about that pop and that grind, right? We talked about that strong move, shallow pullback, higher and higher in price, and those traps, baby. We talked about those going up. We also talked about, right? If it runs up, right? Again, it could be the pop and the grind. We get that deep, deep pullback. They retest the high, and then dump it back down with that 2-try failure and that first test, right? That 1, 2, back down, and then find that channel. Again, I promise not to repeat myself too badly on this, but I want to make sure you guys are aware that that will also apply here on the S&P as well. Now, let's talk about the pullback here now. Okay, we are very, very similar, right? We got a 4-hour bullish bias right now. We've got range rotation off of that low, knocking on the door of that breakout going higher. And the big thing is that spike in channel, right? Spike up into a channel. We know that spike in channel puts us right down in that battle zone, that buy zone. Okay, as we go lower, there's going to be a couple different ways in which we can buy this. The key is going to be using the 2-try rule. For example, I can buy a shallow pullback. Now, shallow pullbacks right now are not very desirable because we know there was never a deep, deep pullback today. In all reality, the buyers had a strong move higher, and they've already retested that high. So there's really no sense of urgency. You know, anytime we see a strong move for the bulls, we know there's a sense of urgency. The buyers are going to want to retest that high. Once they retest the high, though, now it's like, okay, do we break out and go higher, or do we pull back to attract more buyers in? There's no urgency right now on a shallow pullback. So because of that, we have to create some sort of catalyst to help our trade succeed, right? If there's a sense of urgency, I can be more aggressive. On this one, though, this is where a trap entry, 1 try for the bears, 2 try for the bears, is really going to be important. 1, because again, there's no real sense of urgency because of that retest. And 2, because we don't want to buy very high right now. Again, there was a huge move up from that short squeeze that we saw off that CPI report. And again, we did a great job this morning, the trade room, at getting into some of these relatively minor pullbacks, but we never got that really deep, deep pullback that felt like it was going to be a reversal. So we have to be a little bit suspicious of the shallow pullbacks for tomorrow, and that's why that trap is what I want to see for the entry. That also works on the Nasdaq. Now, what is a lot more desirable is going to be the deeper pullback. When it comes to the deeper pullback, what you want to think about here is oftentimes when a market makes a really deep pullback, there's going to be some sort of trend line coming down. And so everything I talk about here on this next kind of sequence here, we want to make sure we're kind of getting around it and ideally trying to use it. At the worst case scenario, you want to simply get around it, right? The best case scenario is you want to apply some of these entry setups using that trend line. Just keep that in mind, right? Keep that in mind. We oftentimes will see markets, they'll pull back off those highs. You draw those trend lines down and they'll go up and try to grab them, right? So just keep in mind on that. Now, what you really want to think about is as we pull back, you know, I've got that pendulum swing coming off that high, down to that low. This whole area, very, very attractive. But what's the problem, though? It's a great place to be a buyer, but if this thing rolls over overnight, it's probably going to feel really bearish. And so because of that, as we go lower, it might not be as easy to get this thing to rocket right back up. We're probably going to have what? A lot of bears that are going to come in and try to reverse this thing, you know, because again, that pullback will be very strong. So this is where you have to respect that short-term momentum and let those bears try once and try twice. There's a lot of ways we can do this. For example, my favorite way is a trap right below that prior swing. That's always my favorite. We may not get that though, so be aware of that. We also may see something like this, where I draw a trend line off the high, a trend line off of that low, right? And then this now becomes 1 try, 2 try, signs of exhaustion, major turning point, and where the stops. Yep, stops are sitting right above that high, and we can buy right into those stop losses. Now, one of my favorite sequences on this, if we do get those 1 try, 2 try, and we take out that pendulum, where does the market want to go now? It wants to go back up and rotate, right? It wants to rotate back and forth with this trading range. Until what? Until we see a breakout, right? Until we see a breakout. So if we know the market now wants to make a run back up to retest those highs now, as we see those bears now trying once, trying twice, we get that nice juicy signal candle, which you're going to learn more about in that free trading class. In fact, I have hundreds of examples of setups like this, of how we apply this to our favorite markets in our trade room, all part of that free trading course. So grab that link in up there, upper right hand corner. Now, as we go higher, this is where we can start looking for those new channels. We can mark off the high, right, off those highs, bring it down to that low. And again, my favorite entry on these is the first test, and I love it when I can get right below a prior swing. Right? Ideally, you want to get that first test and you want to get below the moving average, because below the moving average is where you can get some traps, some failure patterns, and then of course grab that first pullback right to the moving average as it jumps higher. I'm obviously simplifying this right now. You'll see a lot more, more examples of these in that free trading course, and of course we'll do it together every day in our morning trade room, which opens up at 8 o'clock tomorrow morning. So got a failure pattern, 2-try failure, right, and then of course that first test is the best test off of that, right, off of that new channel. Now, again, let's say for example purposes here, right, we get something like this where it runs down like this, right? And so what might happen is we may see something like this where it goes 1, 2, up and over, and it may retest that low. Remember how I said earlier, if we go up and retest the high, then what do we always say? It's mission accomplished. Then it's 1, 2, back down again. Remember that sequence over on the NASDAQ? It's the same basic idea here. So we may get a really strong move down. There could be a trend line right there, and they may take it up, over, and then retest that low or come very, very close to that low. And this is where you want to think about that moving average coming over, trap in some of those rookies, 1, 2, and use those stops as fuel. All right, so don't be surprised if it really rips lower, pops up, double tops, or comes very close to double bottom, right, double bottom, and then from there, 1, 2, and we're running stops from there, right? That could easily happen as well. Find those stops, buying the stops, and then, of course, grab that new channel as we're going. Right? And so this could all come together, right, with like that trend line coming down, right? So keep that trend line in mind as we pull back, and use that 2-try rule, because when you can use stop losses, it's like gasoline to get that trade to work for you. Now, on the pullback right now, at what point does this thing turn bearish? At what point do we start selling this? We talked about that double top short, which I really like a lot for tomorrow. As we pull back though, what's the key going to be? Okay, there's going to be 2 giveaways that it's time to look for this thing to be a short. First of all, if we take out that low, right, we end up back around these areas. The moving average comes over, right? The bears don't try once and twice and fail, right? They try once, twice, whatever, and they crush it, right? They jump off that moving average. I have no idea why that would happen, and I don't care why it would happen, right? We have to forget about the why, right? Isn't the why in trading? The why is meaningless. All that matters is it is happening right now. Trade what's happening right in front of you. This is why I'm always kind of preaching to my students in the trade room: turn off the television, turn off the news media. They try to create these whys and these explanations. It's worthless. It's useless information. All that matters is if we get back to that low and the bears come in, right, and they jump off that moving average, okay, now we know this is a reversal, and now we get aggressive. We mark off that low, we mark off that high, we mark off prior swings, and we try to get above those prior swings, get above the moving average, those traps, those failures, and those pullback combos. Okay, now where do we think the market wants to go at that point? Okay, where's the objective? We're selling off the high of that channel. Again, don't forget that first leg and that third leg are very, very symmetrical. We also pretty much have a good idea here of where this market wants to go, right? If I had to guess, if this market reversed like that, I would say right away that 41 3/4. Tomorrow's a Thursday. That is last Friday's close, right? That's basically the prior week close right there. And on Thursday and Friday, the prior week's close becomes a big psychological magnet. Ideally, they're going to want to go back to that range we came from at the end of the day yesterday. But if the bears can take this thing lower, hold that pullback, and blast off that low, find that channel, sell that channel, right? Again, we're going to use that first leg and third leg, okay, for those shorts off the high there. And again, I would assume this area right here, that 41, 47, 41, 41, 41 and 3/4 will be a very, very attractive area because also, too, it's right where that kind of squeeze happened, right, that we saw this morning in our trade room. Another reversal that you want to think about is let's say, for example, something happens overnight, right? Oftentimes what will happen is the market will punch up and then instantly reverse and begin to grind down. Remember, the grinder is a huge, huge giveaway. Okay, what will probably happen is it'll probably jump up and then reverse, right? Almost like a head fake going higher there. Then what we want to do is draw that trend line nice and steep, right down those lows, right? Bring it nice and tight off of that high. I know it seems kind of funny to draw the channel like that, but trust me on this. This is where the money is. Mark those prior swings and grab that first test. And again, ideally you want to be the first try off that channel, get above that 21 moving average, right? And then of course, failure, pullback combo, right? So we've got plenty of options here to sell off of that high. That's a pretty easy trade as we're going lower. So keep your eyes on that. But again, as we pull back, the first priority is trapping those bears and back up into that trading range. If the bears hold it, then we start looking for that reversal and we start getting in on that, right, on those shorts off that new channel. All right. I know I want to grab that first one, but it's not a reliable trade at that point. All right, guys, how am I doing? Any questions on this stuff? Let me know in the comment section. Right? Let me know if you guys are loving it. If you're hating it, let me know what you like, what you hate, and I'll make it better next time for you guys. How about some crude oil? Wrapping things up here on the oil here tonight. Boy, oil is a wild one here right now. A lot of geopolitical stuff going on right now with oil. There are three basic principles, key insights that are telling us where the money is on oil for tomorrow. The first one is a 4-hour bias. Again, kind of a medium-term bias is overall bearish. This is not a bull market right now. It is a bear overall market. Now, second clue here is a range right there. And you can see the market begins in a range, goes up, goes lower, and now we're rotating off of that low. Now, why is it important? Well, first of all, that rotation off the low gives us a lot of momentum. So we are long-term bearish or medium-term bearish, but we're very bullish right now in the short term. That tells us what? We need to use the 2-try rule. We need to see signs of exhaustion. We can't just sell it, right? Unfortunately, it's too bullish just to walk in front of this freight train. We can't sell it, okay? Second thing is the amount we go below the range is conveniently the amount we go above the range. Again, that could be a coincidence, but that's pretty convenient. You can see the market runs all the way back up and they stop. No, not back at these highs. Right? They don't go right back to retest that big high. You would think they would, right? You would think they would have at least taken out that high. I mean, come on. If they reverse off that low, all that strength, you're not going to take out that high? Really? Okay. Got to be something else in your way. It's probably that pendulum swing, right? Pendulum off that low, pendulum off that high. If you've been following me for a while, or if you're a member of our trade room, or if you've taken the free trading course on our website, you know pendulum swings. It's almost spooky how well they work sometimes. So they are about as close to magic as you're going to get when it comes to range markets. So that tells us that even though we get a lot of bullish momentum right now, we're at a major area of resistance with a trading range magnet right below us, and not just a range, but that is one of the big round numbers, right? Look at those zeros, right? 100, 110, 120, 90, 80, 70. These are some of the granddaddies, right? The grand wizards of round numbers, Obviously 100 is the big one. 50 is a big one. 75 is a big one. But these are big psychological magnets here. And of course, the final one is that pendulum swing. So we know we're bullish. And yes, I definitely have a stomach for some breakouts going higher, right? Will be some breakouts going higher here. The pop and grind breakout, the 2-try breakout, right? The 1, 2, 3 breakout. We definitely have potential for breakouts. And I also really like the idea of a crown reversal for the reversal here, or a double top reversal. We talked about that earlier today. Or maybe it slides into one of those grinders for a trap going lower. There's plenty of ways we can trade this here, both the buy side and on the long side. Now, first of all, if we do go higher, right? I had that channel on here right now. I can't buy that. I can't buy this right here. Not with this resistance here, not with there being an overall bear market. And these are the situations where you do want to lean on that longer term direction, right? That 4-hour direction. It'll keep it in trouble like this. But hey, maybe they do hold it, right? Maybe they do hold this thing and jump and run higher here. Okay, where are we going? 95. Right? 95 is the next big round number. You can pretty much guarantee it's where this market wants to go next. Okay, oil's very, very simple like that. Again, I'm going to draw a trend line off that high. I'm going to bring that trend line down off that low, find that channel, and I want that first test. Right? Again, this could be any of the entry patterns we talked about so far. Traps are my favorite. Could be a seller failure below the moving average, right? We've gone over those here before. Again, think about 95. Think about 95, right? That's where they want to go here next. Or maybe something happens in the Middle East. Maybe something happens in Russia, right? A lot of geopolitical stuff going on right now. Maybe we pop up, right? We pop. Strong move. Real strong, right? Real strong. Shallow pullback. Higher high in price. Traps, baby. Easy, right? That's an easy one too. Strong move. Shallow pullback. Higher high. That trap. It's an easy money trade. One of my favorites. Or we pop and we grind, right? Pop and grind, draw the trend line off that high, mark it off that low. This is getting pretty easy, right? Once you kind of learn these setups, they all kind of get recycled over and over again. Trading is a game where once you learn how to do it, a lot of it is it's very repetitive, very repetition. Repetition is the stone that hones the knife of success, we always say in our trade room, right? So we kind of use the same tools because they work so well. Anyways, as we're going higher, those are some breakouts to keep in mind here. How would I sell this market? There are 3 basic ways to short this thing. One, the most aggressive way to do it, because we have all of that momentum, we have to, first of all, be at a major turning point. Second of all, have signs of exhaustion, right? 1 try, 2 try. And third, we got to have a catalyst. We got to have some stops to get run to give us some juice, right, going lower here. What you want to do in this situation, because we have so much bullishness and because we haven't gone back and retested that high yet, is you need to focus on selling as high as possible. Now, we went a little bit on a tangent about this last night, right? I don't want to sell it as it's going lower, okay? Because if it's this bullish, buyers are going to buy low. Right? I want to sell it as it's going, I know this is kind of scary, but I want to sell it as it's going higher. What I do is I use a very simple little indicator signal, right? Not an indicator, but a candle signal off that trap, right? So it's 1 try, it's 2 try. Those are our signs of exhaustion. The stops are hanging out right below that low. And once we get that nice, juicy red signal candle, it'll spook all the buyers and they'll get flushed out and running lower. Okay, these will oftentimes produce a pop and a grind going down. Okay, once we see it pop and grind, again, crown reversal, 2 try failure trap off the high, then we mark off that low, mark off that high, and we hit it again. Okay, the goal of this is to get into this thing as close to that first test off the high of that channel. Okay, it could be a trap, could be a failure. And then where do we think the market wants to go? It's going to want to go back down and take out some of these lows. Okay, 88.53 is the prior week close. That's an easy one to think about. Okay, so that's an easy way. That's one way I can look to short this thing off the high. Another way I can short this would be the little bit less aggressive, right? So now let's say the buyers pull it back, they buy it. Again, I'm not a big fan of that buy right now because of the long-term bearishness we're in and major levels of resistance with a range below us. But let's play devil's advocate. The buyers come in, right? They scramble together. They make it happen. They retest the high. Okay? The smart money are buying low. Now comes in all the dumb money. Right? They're buying high. They're trying once. They're trying twice. There are my stops, and I can sell into stops. And again, as we're going lower, I'm going to find that new channel. I'm going to mark up my traps and find that prior swing and hit them right off the top of that channel. Okay, that is very similar to the first one, but very big difference though, right? On this one, the buyers come in, they double top off that high, mission accomplished now for the buyers, and then we start looking for the signs of exhaustion, for the failure, and we hit it aggressive off the top of that channel. I really like that reversal as well, and we talked about this scenario a few times already. The next one here would be, let's say, for example, it V-tops, and we kind of grind, and we start grinding down. This is the third one here now. Now, these can be a bit tricky because you can't get too aggressive going short here because, remember, it's still a very bullish move, and we may pull back to this area and still kind of pop right back up. Okay, be a little bit patient on this one. Let them start to grind it down, right? It'll separate off the moving average and begin to grind down from there. When that happens, when it starts to grind, it almost feels like it's on a string getting pulled lower. You mark off that low, you mark off that high, absolutely. And we want that first test off of that level, right? Or something like this, right? We go lower, we pull back to the moving average. The bears come in and they just whack it, right? And they just jump off that moving average. We call these 1, 2, 3 reversal patterns. We mark off that low, we mark off that high, and by now you guys could probably teach this lesson yourself, right? First test is the best test, right? We know some of these lows down here are where the market wants to go. All right, guys? If for some reason tomorrow we go sideways up here, okay? Same thing for the S&P and the Nasdaq. If for some reason tomorrow we end up going sideways here, okay? Sideways ranges are magnets. That's probably the only scenario where, right, if we start going sideways up here, or if we were to, like, for example, do one of those spiking channels, right? Where it kind of grinds and grinds and grinds like that, right? Spiking channel, what do? We look for the base of that channel, the deep pullback. We rope in some bears, right? Get those bears selling down here, and we buy it back up again, right? So there are other options here we can use here. For example, right, if it was to go sideways up here, that trading range becomes a big factor in this. We start looking for levels of support, and we wait for that pullback. Range is the magnet now. So if we spend a good chunk of the overnight into tomorrow morning going sideways, we now know that trading range becomes the magnet. And then once we get that pullback to some support levels below that trading range, we use the moving average to rope in those bears, and we simply buy into those stops with failures. So keep that in mind too. And again, that would also apply to the S&P and the Nasdaq. Right? See, I promise you some good stuff all the way to the end here. All right, guys, what do you think? Any questions? Let me know in the comment section. Did I miss anything here tonight? Do you agree? Do you disagree? Am I completely off my rocker at this point? Let me know. I'd love to hear from you guys in the comment section. And while you're down there, make sure you hit that like button if you guys are enjoying it here tonight. All right, game plan is all set for tomorrow, Thirsty Thursday, right around the corner. And don't forget, we've covered the game plan tonight. Tomorrow, we're going to trade it together in our trade room. We open up every morning, 8 o'clock Eastern time. If you're serious about your trading career, if you're not getting the results that you want, if you're looking for a place to learn this stuff and trade along with me, our membership, our trade room is the place to be. I'll put all the free classes, all the membership classes, all the trade room information. I'll put that right below this video, either on a button or in the video description. So grab that there. Don't be afraid to call the office. The easiest way to get information is to pick up the phone and give us a call. We're a small family-run business. We're not a huge corporation, so we do answer the call. We love speaking to you guys, so don't be afraid to call the office if you have any questions. We have live chat on the website, and as always, you can drop questions in the comment section below. All right, guys? Now get out of here. Get some rest. It was a busy day. Today was definitely one of those days that reminds us of why we love being a trader. We had a great game plan today in the trade room, and members are loving it right now. So I'm a very happy leader of our community right now. Anyways, we're out of here for now, though. Get some rest. I will see you guys tomorrow morning, Thursday morning at the opening bell in our trade room. If not, we'll see you guys same time, same place back here tomorrow, okay? All right? As always, be well. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.